Okay, what is going on, my God team? Welcome back to our channel. Thanks for tuning into today's video. We're going to be doing a GMT update, guys. The last time we talked about GMT was about 3 or 4 weeks ago at around $4.10. We told you guys the top is in for GMT and we are going to see a significant drop down. So today's video is a technical analysis. We're going to be taking a look at the charts, drawing out our indicators, our lines, our horizontal and diagonal support zones, and giving you guys a prediction of where we think the price will be headed in the short and long term. Let's go ahead and dive right in. So to start with, we need to go ahead and put in a major horizontal supports. And we're going to utilize the VPVR to help us a little bit, just because we don't have a lot of historical price data. If we go ahead and look at the chart, there's really not much historical data around these levels. It really didn't hold any of these levels for much longer than maybe a week at some point, or even a couple of days, when it kind of shot past these levels quite quickly. So even according to the VPR, we don't have a lot of historical trading volume, or trading volume, should I say, at these levels. We can go ahead and input some support zones to start with, which will be this zone over here. This is probably one of the major support zones on the chart right now, which is at 82 cents to 62 cent range. We can go ahead and put that as a horizontal support zone on the chart, and that kind of lines up with that POC line. And if we go ahead and look upwards, we do have a major resistance zone sitting around $2.18, pushing upwards to about $2.24. We can go ahead and put that one in. And moving downwards, of course, we have our major horizontal supports all the way down at these levels. We're not going to go ahead and pop anything in. We'll go ahead and put a horizontal line on that VPVR. Change that one to red. Yeah. And moving up from here, we do have some supports and resistances around this range. We'll go ahead and pop this one in at 30 cents. And moving up from there, we do have another one sitting around 44 cents. And moving up from there, finally, we're going to leave it blank. So we're going to go ahead and get rid of the VPVR now. We don't really need it any longer than that. We have everything on the chart here now. We can see we have this huge gap. And we told you guys in the video that if we lose this level here, we have a huge gap all the way down to $1 or 90 cents. And we did in fact see that huge drop. And that was from our previous video. If you want to go watch that in the previous video. But we can see that actually occurred. A huge drop, about an 80% crash since that all-time high. And looking at the short-term time frame right now, we do have a very clear pennant formation. We're going to go ahead and draw our pennant lines in. So we have our uptrending support line for our pennant over here. And we can go ahead and just copy and paste that one over. Just apply it to the same point and drag it upwards. And we have our downtrending resistance line of our pennant over here. And we can see we have a very clear bearish pennant formation. Now, a bearish pennant formation target results in a measured move. We go ahead and extend that downwards just between the current support resistance range to the next horizontal support. This brings us to around 54 cents. We're going to go ahead and draw a green line in at 54 cents just so we can mark it on the chart. That is our measured move target. So our final target, or our final bottom from this move, would expect us to be around 54 cents. So guys, that is about it so far. There's really not much else to go over the chart. Like I said, there's not much historical data. I can quickly talk about this over here. If we go up to RSI, we go ahead and draw in a pretty large uptrending resistance, which is over here. And then we can go ahead and look at our, I think it was a daily. If we go ahead and take a quick look at, no, it was a 4 hour. We have this declining RSI. So this declining RSI over here with an inclining in price, indicating that we have this bearish divergence, guys. And this was how we kind of predicted that top. We had this bearish divergence form, very indicative of a top signal. Had that resistance at that fourth one. We had this baseline support on the RSI, which was sitting around, I think it was around 49 or 45 on RSI. We can see over here. And when we lost this on the level, we can go ahead and look over here. When we lost over here, this green line, and we finally broke down below it, that was at this point in time over here, where we kind of rejected, came back, resisted, and pushed downwards, indicating we were going to go much lower. And we saw that until we reached basically an absolute bottom on the RSI, history of GMT around 16 or 15 on the RSI, so quite low. But moving back to the current present time right now, we do have this very clear bearish pennant formation. And the question is, I guess, are we going to break upwards or downwards? Because a bearish pennant, of course, like we already know, isn't really a bearish pennant. It is a neutral pattern. At the end of the day, these are sideways consolidations. They have equal chances of breaking up or downward in general. However, when you have the price entering from the top side, we generally see that continuation to the bottom side at a higher degree of probability. It doesn't mean we can't break upwards, it just means we're more likely to break downwards than we are to go upwards. Now, vice versa, if the price entered from the bottom side, we're much more likely to continue upwards than we are downwards. Now, it can happen, but it's less likely. So what we're looking at now is we're looking at a higher degree, higher probability that this price will continue downwards into this support zone as the next target and final target, potentially bouncing over here before heading up. So that is kind of our analysis today on GMT. We're going to quickly go ahead and introduce BitGet Exchange. Then I'm going to go ahead and do a technical analysis and kind of figure out what we're actually looking at on the smaller time frame. I wanted to quickly introduce my new favorite exchange, BitGet. BitGet is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. BitGet has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. Okay guys, let's get back into the video. So the technical indicators aren't looking too amazing, and obviously the prices dropped below the clouds for a fair bit of time now. We do have this pinching of the conversion line and baseline, which we can see, and that could actually result in something favorable, which is what we see as a bullish cross of the conversion line breaking over the baseline. That could indicate a potential entry point and a push up into these clouds, but this is the big but. This is less relevant than the macro structure, and the macro structure at the moment is a bearish pennant, and we already know that we have a bearish pennant formation which is more likely to drop to the downside. We can see that the lagging span has found a level of base support similar to what we see on the pennant over here, indicating that if the lagging span drops below this level, the price will drop below that level, confirming the next move down. Remember, the lagging span is used to confirm momentum, confirm trends, just as the RSI is used to confirm momentum or indicate shifts in momentum. This is used to confirm momentum. All right, so I butchered that. The RSI is used to confirm shifts, like changes from more or less momentum over a period of time, and then the lagging span is used to indicate or confirm momentum-based trends. So if the momentum-based trend goes down or breaks through a horizontal support, the price has also done so, but it is more likely for that continuation to occur. All right, so we already know that if we break down below this pennant on a small time frame, we are bearish. We already know that we have to have a bearish present going into this analysis because of the current market structure. And we already know that we do have this small horizontal support line at around $1.34. And if we lose $1.34, we have what we call a resistance support flip. A support resistance flip, when support becomes resistance and we continue downwards into that 80 to 60 cent range. So there's not too much I want to go over for technicals today because, like I said, the chart's only about 75 days young, so there's not too much to really analyze. And it is more about the previous snip of this video that we did earlier, which was talking about the macro structures and the market structures and the support demand zones, which are going to really help us identify where the price is going, rather than the technicals that we saw in the chart over here. I can, however, bring up the Gaussian channel, and the Gaussian channel on the 12 hours looking pretty useless. But if we go down to a smaller time frame, we can see that the price has actually entered back into the Gaussian channel. And again, we've seen this happen on Bitcoin. We saw this happen in the last few months, which is this sideways ascending channel formation Bitcoin had. Remember that ascending channel formation, and we had that price enter the Gaussian channel, push upwards through a midline, and never really get through the Gaussian channel and actually just come back down. So we could see something like that happen for GMT. We could see an ascending channel formation actually being developed here, and I think it's too soon to say. I don't really want to go out on a limb and say we're going to see an ascending channel, but we could see an ascending channel formation where we'll see the price push upwards here, shoot upwards to this range, and then get rejected only to come back down. Now, our $2 range is a major rejection zone. We're going to go ahead and show you on the chart right over here. Huge rejection zone, huge support zone on that short-term time frame. Very, very possible. And this is why I'm saying we can't just be completely bearish right now. Even though the technicals are indicating bearish, even though the market structure is indicating bearish, the chart can change quite quickly. It is depending on what Bitcoin does. And we do have to be aware that even though we are in a pennant, there is a potential break upwards. And I would be waiting for a break out of this pennant over here. If we break the pennant, break the midline, we'd be looking for confirmation, and a push upwards is definitely possible to $2. Otherwise, that downside push, like we mentioned, is taking us down to about 60 cents. So I wouldn't be trading GMT right now, and we already know during neutral consolidation patterns, the best thing to do is wait for the direction. Anyone trading within a neutral consolidation pattern should be scalp trading the swings. You should not be trading based on the assumption of where the price will be going. If you're trading just saying, I'm buying now because I think it's going to go up, you're doing it wrong. You're completely doing it wrong, and you're gambling. If you're trading now saying, all right, we found a bit of support, I think it's going to push upwards to a resistance, that's more likely to occur. That is more of the mindset you should be having, but not at this point of the consolidation. If you're using that logic at this point of the consolidation over here, or this point of the consolidation, sure, but right at the end of the consolidation where a decision is going to happen, it's too late for that. It's too late for that. So wait for a break, wait for a decision, wait for the direction to be clear, and then jump on board with the direction and then follow through with that direction and make your profits. All right, guys, that is it for our analysis today. We've given you our targets. We've told you what we think is going to occur. I'm not touching GMT. I think it's going to head lower, guys. I don't trust the chart right now. I honestly don't even have any faith in the fact that it's going to go up, and I definitely don't think I'm even worth risking any money on it or even taking a position. I will, however, say if we do lose this red line, I'll be opening shorts to around 80 to 60% targets, and if we do break over this midline and find support, I'll be entering longs about $1.80 to $2. All right. That being said, guys, I'll catch you in the next video.